More fun than a barrel of monkeys. Apparently, it was not safe for work, is what it was. So it just shut us down.
Well, we are here again with Art Wood. He is gracing us with his presence and his knowledge for part two. So get ready. Here we go. Thanks, Art.
Absolutely, happy to be here again. Happy to be back. It's a crazy market right now, but when a seller is going through their list of offers that's this long, the ones that are going to go to the top are going to be cash, right?
Yeah.
Cash, conventional, actually, and then not even conventional, but it's conventional with a lot of money down,
Right.
Potentially, and it may be conventional without an appraisal contingency or without a financing contingency, and then you typically will get to the FHA or the VA loans
Yeah.
down at the bottom. So I think it should be everybody's goal, if you can, to get the best loan product that you can. So,
Right. Exactly. And the
yeah.
reason why the FHAs aren't looking so good to people selling their homes, because if their home is not up to par, they're going to need some things that FHA appraiser is going to say, this needs to be fixed. You
And
know,
it's kind of a silly list. A lot of it's health and safety,
yeah.
but like there's rotten wood on the windows.
Mhm.
Okay, so what? But that's got to be fixed.
Yeah.
I haven't had many issues with that, but then again, like I said, I'm 98% conventional.
Right.
So, yeah, but that is. Oh, and the other thing about FHA that stinks is if you get a low appraised value, it sticks for 6 months.
For 6 months, right?
That's right. So you can't accept another FHA contract as a seller,
Hmm.
knowing unless you're willing to take that appraised value that came in low.
Right. Definitely. Thank you for remembering to share
Yeah,
that.
yeah. Conventional. Well, I tell you one other thing that's pretty interesting about conventional. It doesn't happen often, but sometimes you can get an appraisal waiver.
Okay.
Like I've got a lady buying a condo, or debt to income's fine, credit score is fantastic.
Hmm.
She's putting down like 60%, 50, 60%.
Right.
And I ran it through auto. That's another thing we'll come back to, automated underwriting system, AUS. There's another one. Anyway, when I ran it through AUS, that came back and says, "Oh, appraisal waiver."
Okay.
So she was comfortable with the price she was paying. She didn't need somebody else to tell her that it was what it was worth or what it wasn't worth.
Hmm. Hmm.
And she saved $500. So, and you never get that with FHA.
Right.
You can't get that. But let me tell you real quick about AUS. And I don't know how much time we have left, but I get on a roll.
I
Um,
get it.
AUS is so underwriters, and this is conventional FHA. It doesn't matter. Underwriters are not the ones really going, I don't really like you. I'm going to deny your loan. That's a computer system. So what I say underwriters are fact checkers.
Yeah.
So you put in all of the pertinent fees, or not fees, pertinent information.
Hmm.
Hey, you worked this time, you worked this time. This is who you work for. This is how long you worked there. This is your income. These are your assets. All these different things, and you run it through the automated underwriting system, and it spits out a, hey, you're approved, congratulations, or you're not.
Right.
Uh, and then you figure out, well, why doesn't it? It's reading your credit, it's reading everything. So when don't get mad at an underwriter first and foremost. They always get a bad rap,
Hmm.
but that is what. So I kid when people are in my office doing an application, and I'm going, well, if you never felt judged, you're getting ready to feel judged right now. I'm going to push that button, and you're going to feel judged.
Yeah.
So but that and so conventional has Fannie Mae and Freddie Mac, and you can run it. It's either one of those systems, and some they actually do things a little bit differently. So you may get an approval on one and not get an approval on the other one. You may get an appraisal waiver on one and not get an appraisal on the other one. Appraisal waiver on the other one. And then similar to FHA, but it's run against FHA qualifications. So so really underwriters are just making sure that number, all the numbers and all the facts that are in the application are legit.
Hmm.
By verifying with like verifications of employment, they're looking at pay stubs, tax returns, W-2s, and coming up with that calculation.
Okay. A question about credit specifically. So it's not just about the score. You guys are also looking at how long it's been since you've had something negative on your credit report, right?
So yes and no. I like when we look at the bankruptcies and foreclosures and short sales. I mean, that's the biggest thing.
Mm-hmm.
Typically, if you're a 700 credit score or better, you generally don't have some of those
Like
issues that
payments.
you maybe would have on FHA. Um, but I think it's interesting when you look on a credit report, it gives you all the reasons why your credit score isn't perfect. So somebody could have a 805 credit score, like near perfect, like 3 points away from perfect or what have you. And it still gives you the reasons why it's not perfect. It's not 835 or it's not 850.
Right.
And you get more clients that are so protected and they're like, why isn't my score? It tells me too many. I've never had this. And it's saying there is a reason it's not 850.
Mm-hmm.
It's still awesome. So, but yeah, but some of those things, are mortgage pull or not, or credit pulls,
Yeah.
and people ask me, say, well, if I get a credit pull, how much is it going to drop my score? And I was like, well, for good credit borrowers, it typically doesn't. It's very minor
Mm-hmm.
because they're not typically getting their credit checked a lot because they're not trying to open up accounts. They're not trying to, money. That's ultimately what drops your credit score. Is just like, why is this person needing money?
Mm-hmm. Mm-hmm.
You know, and with the better credit scores, a lot of times, it's like they're not, they're only doing it on not on a need basis. It's like, I'm going to buy a house.
Yeah.
I'm going to buy a car. I'm not opening up 15 credit cards and I'm not, my credit cards aren't maxed out.
Mm-hmm.
That's the biggest way to get your credit score up is to keep all your credit cards down to about 20%,
Gotcha.
and don't open up new ones. Don't close old ones either,
Right.
because they generate,
The history.
yeah, history. I mean, yeah. So, and all of a sudden just like, oh, I closed that out. Well, there just went some good history.
I had a client who was paying off debts and
Mm-hmm.
asking for deletion letters, and she didn't realize that that doesn't happen often. But when she was granted it, it was her oldest credit line, and that
Yep.
really affected her credit score.
Yep.
Yeah.
It can certainly happen. That can certainly happen.
Mhm. Yeah. Um, Let me see. I did hear that you say keep your balances for your credit cards down to below 20%.
Again, what I mentioned about credit scores, it is like it's like which or black magic is or whatever witchy magic. I mean, it's not there's not a. I'll pull some and like there's no reason your credit score is not 750 and it'll be a 690 or something. There's no negatives. Um, and vice versa. I'm going, how is your credit score that good?
Yeah.
It should not be that good. You've got these, it just it doesn't. So, um, but the weird thing is when I run a calculator, or not a calculator, but a simulator.
Mhm.
Oftentimes, um, I'll say, hey, what if we pay this off? And it actually the credit score doesn't go up as much as if I leave $100 on it.
Got you. Got you.
So
Yeah.
again, I think it's just training yourself in general, and is to just always keep it at,
Right.
and it's like, well, I always pay it off, but okay, that's fine. If you have a tendency to run up $2,000 a month, then go get your balance, or whatever it is,
Yeah.
go get your balance increased to 10,000. Because
Mhm.
it is not how much money that you owe on credit cards; it's how much money you owe based on how much you can borrow.
Got
So
you.
I mentioned all the time, I was like, you can have $1 million on credit card debt, but if you have a $10 million limit, your credit's going to be great.
Yeah. Yeah.
But if you have a $10, debt and your limit's only $12, then your credit's going to stink.
Yeah. Yeah. Yeah.
So
hmm And all of that stuff just are algorithms and like you said, the
right,
computers are running the numbers. They don't know how great of a personality that we have, that we're wonderful parents, all of those things. They're just going from what the typical buyer of a home should look like.
that's right. Well, and honestly, people want to make this and it is a people business, and it's just like yours, in
Mhm.
that you've got to establish trust and everything else. But my decision, or a lender's decision making has nothing to do with what a great person you are. But I'm on the mend. Great, come back to me when you're mended.
Yeah.
I didn't file tax. I didn't show much tax. I'm self-employed. I didn't show much income. Come
Mhm.
back when you do.
Yeah, exactly.
You
If you
know,
don't mind sharing, what is the wildest thing you've seen? And I will share one. It didn't happen to me. Real estate agents always share their stories. I've
yep.
heard of people quitting their job the day of closing because my spouse said I don't have to work anymore. Needless to say, that the mortgage professional verified employment that day, and they did not walk away with the
Oh
house.
my goodness. Oh my goodness. Sorry, I actually had an appointment a couple minutes ago, but that is all right. This is way more important. I can push them off for a minute. Um, the craziest.
I've heard of people buying housefuls of furniture on credit and didn't have the house yet. So
Yeah. Well, I just had a client that moved a bunch of money around, and that's one of the things too is don't think for yourself. Because follow what your mortgage professional says to. Um, because I had this client that thought he was doing the right thing. He's moved some money out of home equity line to put it there. Well, it caused his payment to go up by $500, and
wow. Mm,
almost sunk the deal. You
mm.
know, so don't move money around. I had a client that, hey, by the way, we're getting ready to close. We're clear to close, and oh, we can't. Why? Because he just got an $800 a month new BMW. Like, you had a 500. Well, I traded that in. Well, now we were supposed to close yesterday or today or whatever it was. And now we have to go verify that. We got to go verify that the other one was traded in. And
Mm. Yeah. Yeah.
I've had, actually just we're closing on one Friday where we tried to push it up in time, but the seller died.
Oh, wow.
And it seems like and I don't know if it's just COVID related, but really it's been a couple of, I've had a couple of those things this year.
Oh, wow. Mm.
So
It happens, man. Wow. Life happens.
it does, it does, and then you realize, it messes up a real estate transaction, but and, which is our livelihood. But then you're like, okay, so there are far worse things than losing a deal. We'll go find another one or whatnot, um, but crazy, honestly,
Art has froze. He's in the abyss. He's in the matrix. Well, I don't know if he's going to come back to us. So, Art, thank you so much for your patience. Technology had its way with us today. You want to share what happened?
it was nuts. It was nuts. It was just a blackout. That's what it was. It was just an EMP, a blackout, but it just got all crazy and just apparently it was not safe for work is what it was. So it just shut us down.
Well, we are thankful that we're able to tune back in and, in this segment with some positive energy for you guys. If you didn't check out part 1, make sure you take some time to go do that. And Art, if you can let everybody know how to get in touch with you, we appreciate it.
Not as much as I'd appreciate it. Yeah, you can call me at 678-534-5834. That's 678-534-5834. Or art.wood at Goldwater Bank. And I am with Goldwater Bank. My name is Art Wood with the Art Wood Mortgage Team.
Perfect. Well, thank you again. I hope you guys can use this information, like it, share it, subscribe, and Art is here for you in almost all of the states. So if you need a mortgage professional, his contact information, he shared it verbally, and I'm also going to share it below. So thank you again for spending some time with us. Conventional home loans was a conversation, and you have a good day.
Take care.